So I am a man of my word. I actually received a comment in my last video that asked me to cover my portfolio and go into detail about how much returns I'm getting for each dividend that I do receive from each stock. So in this video, I'm going to be breaking down my entire portfolio. It's going to take a little bit of time, but I'm really excited to just take a minute, take a step back, and be able to identify the stocks that I'm investing in and answer any questions that you guys might have. So if you're watching this video and you do end up having any questions along the way, make sure you leave it in the comment section down below. And other than that, I hope you guys do enjoy this video. Listen, just a quick disclaimer. Make sure you guys do your own research when you are investing in these stocks. Don't just blindly copy me on the internet. It may not work out as good as you might expect. So definitely do your own research. Don't blame me if the stock market crashes or anything. I just don't want to be held liable for any of that stuff. It's all completely up to you. So without further ado, let's get into the portfolio. So when it comes to stocks that I'm invested in, I'm going to be giving you them in order of how much equity I hold. So the most equity will be in Realty Income here, and this is obviously one of my favorite ones, hence the reason why it's such a big equity in my portfolio. It makes up 16.01%. So that is always something to consider. What I'm looking to do now is diversify a little bit more. I do love this stock and I do see myself picking up more in the future, but for now I want to get a little bit more diversified in my overall portfolio. You can see my total equity is $629.44 at a cost for me at $584.09. So my total return so far is $45.35. If you look at the trend of this stock, I actually started buying in around this point, so I kept loading up as the price was going down, and I was able to drive my average cost down to around $73. So that was pretty solid for sticking true to my investment strategy, dollar cost averaging in, because now the stock is sitting at $78.68. And obviously I hope it continues to increase, but this is a very solid monthly dividend paying company. They are quite literally known as the monthly dividend company. If you head over to their website, they have a lot of great statistics that you can look at, and I'm going to be displaying some of those on the screen right now. So here's Realty Income's website. You can see that they're known as the monthly dividend company. Very solid. Now they have 594 consecutive monthly dividends paid. That streak is awesome, with 89 consecutive quarterly increases. So this is a very solid dividend payer to have in your portfolio. They really stick true to increasing those dividends, so you can expect to see a lot of those rolling in the future, and know that it's just pretty stable. Now, looking at the dividend history for Realty Income, you're going to be getting around 23 cents per share, and that is every single month. So if you can bolster the position of this in your portfolio, you're going to be looking pretty solid in terms of an inflow for dividend payments. Now keep in mind, there are around 20 different stocks and ETFs that I am investing in. So the second highest position that I am currently sitting in is within Coca-Cola. Now my equity is $357.54 at a cost of $321.73. Now my total return so far from this investment is $35, which is around an 11% return, and I own 6 shares, obviously a higher weight for my portfolio, but not nearly as much as Realty Income. So this is one that I also, obviously every single stock in this portfolio is one that I really feel like I can invest in for the entirety of my life. There's not much that I have to say about Coca-Cola. I'm sure most of you already know exactly what type of company Coca-Cola is. Now, obviously, this is one of the most solid dividend paying companies that is out there. And currently, for every single share that you're owning, you're going to get around 40 cents per share. So if I can get this to be a higher position, the only difference is between this and Realty Income is that this one only pays quarterly. So you might think that this is a lot higher of a return that you're getting from your investment, but you have to remember that Realty Income actually does pay monthly, whereas Coca-Cola pays quarterly. Now, next is one of my absolute favorites, and that is Johnson & Johnson. One that I wish I had more money to invest with, because it is hard with my weekly challenges where I'm only investing $100 to be able to invest in companies that cost around $150, obviously. So this is one that I look to increase my holdings in the future, but it is hard for the purposes of this challenge. I actually hold them in an offsite account that I do my own investing in as well. So that's something to keep in mind. But Johnson & Johnson is just so diversified themselves as a stock. They're mainly focused on consumer products, consumer staples, but they do breach reach into other industries as well. So they have a large product breadth and large brand recognition in the market, and they just are a solid dividend stock. Now, my total return so far on them is $35. My equity is $303.98, and my cost is $268. They make up around 7.75% of my portfolio, 7.73 to be exact, and very solid. If you look at their trend, obviously most of the stocks, you're going to notice the same thing, is that over the past 5 years they're all really green and looking quite well. So looking at the dividend returns from Johnson & Johnson, you can see this is paid quarterly. So you're going to receive a dividend quarterly at around 95 cents. So it's pretty close to $1. And obviously this is a little bit higher than some of the other ones because the stock is a very expensive stock, you know, around $150. Not easy to invest at that price point for a lot of different investors. So that's why it's interesting to see the types of returns that you're getting from stocks like this. But consistently, you can see last year it was up over 95 cents. At the very beginning, it was 90 cents, but it looks like we're going to be able to maintain those levels. So we'll see where that heads going forward. Next company on the list is one that I've actually lost the most money from. Now, it's interesting because I continue to dollar cost average my way into this. I'm trying to drive down my average cost because this is still a stock that I believe in for the long term. What they do is actually manufacture hot water heaters. They are the largest presence for North America, and they also branch out to places like Asia, I believe a few other countries as well. And what's interesting is this stock has been beaten down quite a bit from its highs, and you can see over the past month we've seen nothing but red. So even the 3 months, I guess. And what I've been doing is kind of loading up now that it is tanking, and hopefully, you know, you could see that it was on a steady increase and it was able to maintain some levels here. What I hope to see is that it's going to bounce back to that point, but if it does not, I'm going to continue to load up more on this stock and just drive that cost down for when it turns around, has a reversal, and it starts shooting back up. I know that this is a solid company that's going to be around for a long time. Now, this company pays around 24 cents per share on its dividend payments. Now, this is also a quarterly payer, so it'll be interesting because if the price does continue to go down, I'm just going to keep scraping this stock and adding it to my portfolio, beefing it up, and being able to get more dividend payments while driving the cost down. So that way, if it does bounce back, then we're going to have some capital gains as well as a ton of profits from the quarterly dividends that I'm being paid. So my fifth highest equity in this portfolio is Citigroup, and this one has been killer for the portfolio. You can see a return of around 18% right here. Now, my equity is $237.33. It cost me about $200, and my average cost is $66.89. Now, I only own 3 shares, but off those 3 shares, I made $36.67. Obviously, keep in mind the dividends that I do go over in this video, they are not necessarily taken into account when you're talking about your total return on investment. Robinhood does not actually factor in those dividends that are being paid, so always consider that when you're looking at stocks like this. Now, the thing about Citigroup is they have been absolutely killing it so far. Ever since I was invested, obviously they keep on going up, so it'll be interesting to see if they can maintain their current growth trajectory and their progress that they've made. But for now, I'm very satisfied with this investment and how it's going overall. What you can expect to receive in dividends is every single quarter you're going to be getting around 51 cents, you know, 2 quarters right in your pocket. Very solid return right there. And this is a little bit more of an expensive stock again, but one that I would be remiss if I did not have in this portfolio. I'm super glad that I have this as my financial stock. There's a lot of different ones that you can go with out on the market, but this, in my own opinion, is one of the best ones out there. Now, 6th on the list here, we do have AT&T, very solid telecommunications company. I'm sorry I'm not going super into detail about each one of these stocks because I want to make this video, you know, not too time consuming, and I could really talk about each stock forever in this portfolio. But AT&T telecommunications, $230 in terms of my equity, cost about $212.75 with a total return of $16.39, and my percentage for that is 7.7%. Now, the cool thing about AT&T is they used to offer such a high dividend payment. It was really cool because that's what enticed me to invest with them, that and the big 5G boom, but that was more of a flop than most people would have thought. AT&T is still one of the higher dividend yield payers in the portfolio at 5.4%. You're getting around 52 cents for every share that you own, so it can add up pretty quickly, and it's one of the better value companies in my portfolio because you are getting such a high dividend for the price of the stock that you are paying. 7th on the list is HPQ. Now what's interesting about this one is they keep getting their price thrown up in the air because they're actually in the process of being bid on by a company called Xerox. So their stock has really been all over the place, and I've been able to get nearly a 20% return on them. You can see right here, my equity right now is $223 and my cost is $187.32. So this is one that I really enjoy being investing in because there's new news coming out all the time, and it's one that's just been pumping in my portfolio. And I might actually have to recognize some of my returns soon on this one, and that'll be the first time that I've really recognized any of my returns on my investments in this portfolio. But I'm really hoping that they do get bid and bought out by Xerox, because they would be bought out at a share price of around $25 per share. So that would be a really great return for me. Looking at the dividend payments for HPQ, you can see that they are again a quarterly payer, and you're getting around 17 or 18 cents per share. So pretty solid returns there. Now, one of my favorite REITs out there is actually Monmouth Real Estate Investment, and I don't see a lot of people talking about this one. What I love about them is all of their properties are under 10 years old average for age, and what that means is less maintenance, less work to the properties. You're not going to really need to put in a bunch for expenses to the company, and then they have such great people renting from them, such great organizations and companies. I would recommend checking them out if you don't really know much about them. You got like FedEx and companies like that, so very, very big names. Now, what's interesting is I actually had a dollar cost average into this company as well, got it down to $14.90. This past week, we're finally positive on the stock, and it feels great because this is one that I do love. This is one of my favorites out there, and I really hope great things for the future. Just looking at their trend, they were down for a while. I was in about 3 months ago, so pretty much have been investing this entire price point, and then it's finally turning around here. So really excited to see where this heads, and I think there's a lot of great potential for this stock in the future. This again is a quarterly dividend payer. You can see it right here, and it's around 17 cents. So looking to just capitalize on some of those returns. 9th on the list, we have Pfizer, a pharmaceutical company, one that I really was hesitant to go in on because usually when I do invest in pharmaceutical companies, I don't do as well. But I have an equity of $190.50 at an average cost of $36.71. Now, it cost me about $183.55, and my total return is around $6.95 or 3.79%. Now, this is making up 4.84% of my portfolio, and what I'm looking at for returns on dividends from Pfizer is right around 38 cents paid quarterly at a dividend yield of 3.9%. You guys made it halfway through the list so far. Now I want you to smash this like button if you do enjoy some of this content. I really do love sharing this portfolio with you, and if you guys want to continue to see this insight, just hit that like button, show me your support. It would really mean a lot. Now Microsoft is 10th on the list. This is one of my personal favorite technology stocks out there. This is one that I really want to continue to invest in as well, but I only do have one share of this, but it makes up almost 5% of my portfolio because of the cost of it right now. Now the cost is $184.80, but it actually cost me only $135.59. So for a single return on one single stock, I think this is the best that you're going to see in my portfolio. $49.21, 36.29%. Microsoft doesn't have a huge emphasis on its dividend, but it does actually pay a 1.4% yield right now. It pays out quarterly, and it is in the amount of 51 cents. 11th on the list is iShares Core Dividend Growth ETF, or DGRO. Now this is an ETF that tracks some of the best dividend paying companies out there on the market. They must have been increasing their dividend payments over the past 5 years, and my current equity is $171.68. My cost is $168.49. I invested in them most recently for my ETFs and most recently in the Robinhood Challenge, and I have returned $3.19 so far, so not too bad there. What you're looking at is a quarterly dividend payment, and it's going to be coming out to around 23, 24, 25 cents, somewhere around there, so not too bad. 12th on the list, I have American Express. It was kind of interesting because I was looking for a new credit card this year, and I just found that this was easily the best offer that was on the market so far that I've seen in a while for credit cards. So I decided to pick up an American Express credit card, and around the same time I decided to invest in the company. So far it's paid off pretty well. I have around a 7% return, so not too bad. My equity is $132.66 at a cost of $124.35, making $8.31 in returns. Looking at the return you're going to get for dividends from American Express, they're quarterly paid. You can see it has a dividend yield of 1.3% right now, so you're going to get somewhere around 43 cents as a return from your dividend payment. Coming in at lucky number 13 is my personal favorite ETF, which is SPHD, PowerShares S&P 500 High Dividend Low Volatility ETF. This is a super safe ETF that you can invest in because it focuses on low volatility and high dividend payers, as the title would suggest. Now, I have a current equity of $129.09. It cost me $128.51. Haven't really made too much off of it, just 58 cents, but it's super solid. It's going to be paying you dividends, and I currently have 3 shares, and this is one that I want to be as one of the highest holdings in my portfolio, so it'll be interesting to see how long it takes me to get there. But for now, I'm just going to continue averaging in, probably buy one of these shares every single week for a while. This one is yet another monthly dividend paying ETF out there, so it's pretty solid. You're going to be getting this dividend payment every single month. It's nice to see that in your portfolio. I'm telling you, every time you see these dividends roll in, it's just a little bit of sweat off your back. It feels really great. Now, the amount that you're going to get is around 15 cents, maybe a little higher in the upcoming future, but that is what you're looking at for this ETF. So if you're looking to save more and live better, then you're going to want to invest in Walmart. Now, the reason why I'm investing in Walmart, if we have a recession, economic downturn, people are going to start shopping there more, actually. And I feel like most places would lose business, but Walmart has a place in the consumer's mind as a place that offers cheap goods with high quality. So I really like that. My equity right now is $115.37. I bought in at $118.94, so I'm losing just a little bit of money, $3.57 to be exact, but I'm not too worried. I actually hope that it continues to drop a little bit. I would love to get in at different price points, and I really doubt that it would drop towards $100, but if it does, you better believe that I will be pushing the gas on this stock. Looking at the dividend history, you can see it is another quarterly payer, and they are going to be giving you 53 cents per share. Their current yield is at 1.82%. Number 15 on the list, we've got Charles Schwab. Now, I'm really excited about Charles Schwab because I got in at a perfect time for this company. Now, the reason why I got in at a perfect time was it was just before the trade war. They actually had acquired TD Ameritrade since I had bought them, and that was really what helped bolster this position. So you can see my return right now is 33% on these shares alone. My equity is at $95.34. I only spent $71.38 to get in on this, so that is awesome. And I think there's a lot of potential for growth with this brokerage as well. We're looking at a dividend yield of 1.43% for Charles Schwab, and it's going to be paying you around 17 or 18 cents off of that. So number 16 on the list is Altria, and this is one that I've always had a little bit of moral dilemmas with, but mainly was investing this for financial purposes, and they're actually doing super well, you know, with the sales of jewels and all that. But now that there's new laws and bans on jewels, and pretty much this industry is getting hammered right now, I'm considering whether or not it's worth it for me to hold on to this stock. So if you are holding this stock and you think it is a good idea to continue holding and even buy on the dip right now, then let me know, because looking at the charts, you know, it isn't looking too promising for them right now. But I just want to get some insight from people who have a little bit of stake in the game. 17 on the list, Cisco. Now, Cisco I invested in because I wanted to get more in the technology realm, so I felt like they were a pretty good fit for my portfolio. My current equity is $99. It cost me $98.25, so I've only made 75 cents so far, and I was actually negative on them until today, so not too bad. We'll see how it turns around, where it's shaping out to be. Let's take a look at the dividend payments that you're going to be receiving. So if you invest in Cisco, you're looking at a yield of around 2.92%, which comes out to be around 35 cents per share. Coming in at number 18, we've got AbbVie. AbbVie is a biopharmaceutical company. I wanted to get more into that industry as well, kind of similar to what I did with Cisco, and what I ended up doing was buying in for $87.98, and it's right now valued at $96.05. So what I'm looking at right now is a 9.17% return, $8.07. You see these returns and you wonder why maybe I haven't invested more into these companies. When I did invest them, obviously it's only because I've been able to invest $100 every single week, and there are so many options. There's so many great stocks or ETFs that I want to be investing in. Checking out their dividend history, they have one of the highest in my portfolio at 4.5% yield, and you're looking at $1.07 per share per quarter. So that's really, really cool to see. You're up over $1 with your returns on this. Now, coming in at number 19 and second to last, we have ADM, Archer Daniels Midland Company. They are focused primarily on agriculture, and what you see is my cost was $80.64 when I had entered, and right now the equity I have is $92.24. So I've been able to get a total return around 14% of my investment at $11.60. Not too shabby. Looking at the dividend history, you can see they have a dividend yield of 3.1%. You're going to get around 36 cents every quarter as well. Now, finally, number 20 and the very last ETF that I have in this portfolio, and the last thing that I will be covering in this video, is ProShares S&P 500 Dividend Aristocrats ETF, NOBL, Noble. What this does is actually track the dividend aristocrats. To be in the dividend aristocrats, you need to be increasing your dividend payments for the past 25 plus consecutive years. So that's not an easy criteria to make. It's very hard to get into that, and when you're in that as a company, you definitely want to stay in that realm. So you'll be able to see that kind of mirrors a lot of those stocks. And here is what we have for my equity. It's $75.84. The cost $72.79. Total return just around 4%, $3.05. Just one of these in my portfolio. Looking at the dividend history for it, you can see that it has a dividend yield of 1.03%, and every share that you own of this ETF, you're going to be getting around 44 cents, and this is just ramping up. You can see the past history of it is just jumping all over the place, so you can expect to see this kind of go fluctuating depending on what's on the list and where this ETF is headed. Now, I highly doubt that anybody actually watched the full video up until this point, but if you have, I sincerely do appreciate all of the support that you've given me. Make sure you hit that like button, but if you've already watched this long, I have a feeling that you probably already did that as well, and I really do appreciate that. It means a lot to me. Thank you guys so much for checking out this video. I hope you all have a great day, and good luck with your portfolios.